Right now, let's welcome my good friend and co-host, Jeff Small, president of Arbor Financial Services, a retirement income store in Melbourne, Florida. Jeff is also the Amazon best-selling author of the book, Turning Financial Planning Right Side Up. We also want to bring in our first guest and a good friend of the income generation, Jon Najarian, co-founder of MarketRebellion.com. He's an options trader and also co-author of the book, Follow the Smart Money. Jon, thanks so much for being back here with us.
Thank you, Jeff. Thank you, David. Great to be with you guys.
So it's funny, we spoke in June, we spoke in September, and you said, okay, I'm not surprised that, the market should be going up. Are you at all surprised that we've hit 30,000 on the Dow, created new records, record after record on the NASDAQ, and even the S&P 500 at new record highs?
Well, given the construction of the indices these days, David, no, I'm not terribly surprised. I think the market overall was pretty happy about a divided Congress. That still remains to be seen, although I think we're all leaning towards, the Republicans retaining control of the Senate and Ms. Pelosi losing a lot of her majority in the House, but still the majority place in the House. And I think that means that things aren't going to change much, and the market is pretty happy about that, I guess.
Yeah, you actually said as long as power is split, a Biden presidency would not scare the markets. You said the thing that would scare the markets the most is a blue wave, and I think we all agreed on that. So how about this rotation we're starting to see toward the higher dividend value stocks? I know you thought maybe that would happen first quarter of the year. It seems to have happened maybe a couple months earlier than that, at the beginning of November. What are your thoughts on that? You think, now that it's here, you think that should continue for a while now that we have promise of a vaccine?
Yeah, David, I tend to agree that, I might have been looking a little too far out into the future when I said maybe we'll see it in the first quarter of next year. We obviously started to see a lot of the infrastructure plays, which were battered stocks, from Vale, VALE, and Cliffs, CLF, and Letter X. U.S. Steel, we started to see money go in there just ahead of the election. It definitely accelerated during and after the first week of the new November timeframe. And then I think those continue to play out along with energy stocks like BP and ExxonMobil well into 2021.
Good. I hope you're right, because for most retirees, being overloaded with technology that doesn't pay any yield is not the answer. For most retirees, it's those high dividend value plays that make sense for them if they're looking for income and a little bit of growth. Jeff?
So Jon, I'm waiting on the Santa Claus rally because it still hasn't happened yet. So I think we're all kind of waiting and hoping the second half of December catches fire. But I think in some ways, the Santa Claus rally has actually already been here, because FactSet is claiming a 22% increase in net profits next year, which puts the 12-month forward PE, or price to earnings ratio, on the S&P at 22. And if those numbers materialize, which they probably will be very close to those numbers, if they materialize, shouldn't we be buying for growth the next 12 months? What's your projection based on that the next 12 months in the markets?
I think we're going to see a nice pop, Jeff, as we go into 2021. It probably won't be quite as much as the 11% that we saw in November for the S&P and the small cap stocks in particular, almost 20% in a month. I mean, those are annual returns, we all know, not really monthly. But nonetheless, when you see that in a single month, I think that tells you that there were a lot of people getting ready for some positive moves into 2021. But I would caution folks that in the first couple weeks of the new year, I am looking for us to make a bit of a correction, and perhaps a bigger correction after the second quarter ends, because it's just been so good, Jeff. The trees don't grow to the sky. And as good as it's been, I think we'll see a little bit of a pullback after a very aggressive start of 2021.
Well, you just stole my next question, Jon. And so structurally, though, aren't there some things in the market that will happen around the middle of next month as far as hedging strategies go, because option prices are at their highest they've ever been? Aren't there some things that are going to stop? There's going to be some hedging that's going to stop that could potentially affect some of the values in the market around the middle of January. Is that what you're talking about?
And And John, I can't wait to get your answer to that. We need to take a quick commercial break, Jeff and John. So we'll get to the answer as soon as we get back. And you stay with us. We have a lot more from Jon Najarian right here on the Income Generation. We'll be right back. Now let's bring back in Jeff Small and Jon Najarian, co-founder of MarketRebellion.com. Jeff?
Hey, John, sorry we got cut off at the break, but listen, we know there's going to be some volatility in January. Does that have anything to do with my last question, which is the hedging strategies and option prices being at their peak and hedging strategies not being utilized around the middle of the month? The structure of some of those things are going to change that market dynamic, and maybe a combination of another spike in the virus. Could that affect more volatility?
It sure could, Jeff. We all know the vaccine's being rolled out right now after the emergency use authorization. So that's the good news. The bad news is that it could get pretty bleak. And those hedging strategies that you talked about, Jeff, a lot of folks that have that protection into January need to roll that, or it just goes away. And so many of us wouldn't get into our car without insurance. I think a lot of those big hedge funds and people that are managing money are looking the same for continued coverage. And that means they're going to have to roll out into the future, probably into March and April timeframe. That means January could be pretty dicey right around the time that the new president is installed.
Mm-hmm. John, what do you read from the options market? What is the options market telling you about different areas of the stock market right now?
Right now, it's saying that there's an awful lot of optimism for the banks, for financials, which there hasn't been in years, literally years. There's a lot of optimism in the energy sector. The places where people are buying a lot of protection, Dave, are some of the big stocks that have run up so much. They worry about, the Zoom video meetings and the DocuSigns and some of these companies that have had 300% and 400% returns in 2020. I don't think they're looking for that to end, but they're perhaps looking that maybe we see a little easing of those kinds of returns.
So going forward then, I don't think the market, John, is really more codependent, let's say, on liquidity than it is fundamentals. Because I think the fundamentals in 2021 are going to be more impactful than ever before since we've hit these new peaks across the board, not just in the indexes, but in many stocks. What do you say?
Yeah, I think Jeff is spot on here as far as fundamentals are going to be much more important because we're not just going to be worried about that Groundhog Day, that, every day is the same and it's getting worse and worse as far as the cases, hospitalizations, and so forth. Once the vaccine gets widely distributed, I think, Jeff, you're right. We're going to focus on fundamentals. And that'll mean some of these stocks are looking a little too pricey, just like we've discussed.
So what does that mean for 2021 then for our income generation viewers and listeners? You said possibly a pullback in the first quarter of the year, but where does the market end 2021? Does it end up? Does it end down? What's your best projection for what you're seeing moving forward? I know I'm asking a crystal ball question, but hey, your crystal ball is better than most of ours, so give it your best shot.
Sure, Dave. I think we're going to see a correction, whether it comes in the first quarter or at the end of the second quarter. I think we'll see a dip of perhaps as much as 10%. And then I think that should be bought because interest rates aren't going anywhere. The Congress, unless it really flipped blue, and that I don't think it will, and even if Georgia didn't go to the Republicans, the House isn't nearly as strong on the Democratic side as it was in 2019. So I think all of that plays into the idea, no new taxes, no move by the Fed on interest rates. So by the end of the year, we will be higher than where we start 2021.
Great. Okay, the most important question of the day. As an ex-football player, who are your 2 or 3 top picks for Super Bowl going into 2021?
Oh, I was hoping you were asking me about Trevor Lawrence. But as far as the Super Bowl, I think the Saints look fantastic. On the other side, I think Pittsburgh also looks fantastic. So, a lot of these teams have had to deal, of course, with COVID and players not being available. But if you have Drew Brees back, I think the Saints, and then I think Pittsburgh, because they've been there and they've done that.
And I don't know. Maybe I'm an optimist, but some people are still saying they think Trump is going to be president in January. Well, I still think Tom Brady has a chance if he figures out how to play within the parameters of his team. I'm not going to rule out my buddy Tom. So anyway, Jon, thanks so much for being part of the show once again. We really appreciate it.
Thanks, David. Jeff, have a good one, folks.
All right, and you stay with us too. We have much more coming up right here on The Income Generation in just a moment. We'll be right back.